back on another video. This is chapter 17. Now, this is going to be a very good chapter, right? Some of y'all have realized in the last couple of decades here in America, people are buying all these homes, all these stocks. I mean, you don't realistically need 10 homes. But the reason why people are becoming desperate, buy stocks, and doing all this stuff is because the money is poor. It's fake. It's a horrible store of value. So, again, I'm not saying this out of my ass. I have data to back it up, all right? This is all in broken money. Listen up, okay? Chapter 17, the financialization of everything. When money in society maintains its value well over time, there is an incentive to hold wealth in it. Savers will likely be prudent when deciding how much money to place into investments, such since investments represent a high reward and high risk option compared to the default situation of holding reliable, sound money like gold and silver over time. On the other hand, when money in society keeps degrading in value, there is a strong incentive to hold other things that have greater scarcity and thus to add a monetary premium to those other things above and beyond the utility value of those things. If something like gold is money, then a common form of money is rather sound, and there is less reason for investors to have second and third homes, large stock portfolios, and an assessment of collectibles. I'm sorry, and an assortment of collectibles. Of course, some people will have those things, but they will be more discretionary and thoughtful and thoughtfully collected, and are likely to represent a small share of an investor's net worth. However, in weak money environments where supply of money keeps growing and interest rates are below the prevailing inflation rate, then there is a strong incentive to avoid cash and instead to hold second and or third homes, to buy stocks, and to own large assortment of collectibles at inflated valuations. In the absence of good money, everything else that has some degree of scarcity gets monetized instead. There's also a big incentive to borrow, i.e., to short money, and use it to buy these scarcer things, which drives up leverage in the system. This could be particularly this could be a particular problem when things of utility get monetized to problematic levels. For the most part, it's fine if something like gold has a huge monetary premium above its utility value. This is because most of its demand is for jewelry and savings. And this industrial use case can often be substituted with other materials when necessary. If gold were to double in price next year, most people in society wouldn't have any negotiable negative impact on their life. But if houses get monetized and left empty for most of the year due to wealthy investors and upper middle class investors buying extra ones with cheap credit, then it can crowd out the middle class and working class from having access to affordable shelter. This problem shows up in the ratio of home prices to income and has become especially problematic in desirable cities and tourist destinations. Such high prices make it virtually impossible to afford the housing without very high usage of financing. There you see the housing price affordability versus interest rates. Look at this. This is why the price of homes are literally, been spiking especially the last 3 or 4 years. People are just buying all these homes. You don't need 10 homes. You don't need. Do you really need 8 homes, folks? The money is poor. That's why it's so weird when I believe we're going towards a sound money standard, a ledger that can't be changed. And when that happens, then what? You're going to see all these people sell their home when they realize the US dollar is just paper, folks. This problem is further amplified by global capital flight. Many wealthy Chinese citizens, for example, don't want to hold all their wealth. Don't want to hold all their money in China because there it's easier to confiscate and control. Over the past couple decades, wealthy Chinese citizens have had a strong tendency to buy real estate in Australia, Canada, and Southeast Asia, and thus contribute to extraordinary high housing price in those regions. Not only were property valuations inflated from artificially low interest rates and debt accumulation by domestic buyers, but it was made even worse by this extra foreign demand. The monetization of utility assets can also be seen when comparing equity valuation or household net worth ratios to interest rates. Normally, business equity is valued based on an assessment of its likely future cash flows. When interest rates are high and well above the inflation rate, then equity valuation valuations tend to be low and more closely aligned with their future expected cash flows, with most of their monetary premium removed. When interest rates are below the inflation rate and low in general, people would rather hold almost anything else than cash, whether it be equities, real estate, or collectibles, even at inflated valuations. These things acquire a monetary premium, in other words. And there's a chart right here: asset valuations versus interest rates. All right. So yeah, read this chapter, Let All This Broken Money, chapter 15, chapter 17. This is why, if you have noticed, man, and like I said, in the last 50 years, since going off the gold standard, ooh, excuse me, man. Y'all have seen this here in America, man. Housing has become affordable. I seen this when I was in LA. It's ridiculous. And does it help when there's politicking going on in these big cities, or I should say states, where it's making it more unaffordable for the average person because people are bidding up these housing prices? This will be laughable 100 years from now. I mean, it's kind of sad, but it's going to be laughable that we have 160 fiat currencies, causes friction with trade, and then we sat here and bought 20 homes just to keep our wealth because we have poor money, folks. The future for me is going to be bright, and also for the world, for our species, when people start realizing. So yeah, I'll see you on my next video. Peace, and also study this, man. Study all this stuff because this will make you wiser on what is going on in our world and why people are living paycheck to paycheck, not just here in America but around the world.